All right. Good evening, everyone. Trying something new here. Going to do this every Sunday night from here on out. And I got to mute my audio. You probably had some feedback right there, but the goal with tonight, drop me some comments. Would like to hear any questions, comments from any of you guys. But tonight, just to be clear, may have some glitches, may have some snafus. Just kind of a dry run tonight to kind of get ready for next week for the big launch. But let me grab this. So futures opening up, gapping down hard as expected. So down big overnight, opening up at 6 p.m. Again, as expected. Now, I want to kind of start with a few of those things. Obviously, the market, the overall markets, Dow, S&P, all of the real stocks, ugly week. But listen, you guys know that on the channel at Stocks to Trade, what I do is mostly, short-term trading, day trading, swing trading. And listen, we had an amazing week. Like that's one of the reasons I'm doing this tonight, because I expected, now I didn't know, but I expected futures to gap down big. I mean, it was, the way we closed on Friday, like when you close like that, basically the close on Friday reminds me of like it was like a Rocky fight. Okay. Like the only thing that stopped the sell-off on Friday was the bell. Like it was Rocky getting his head beat in by Apollo Creed. And the only thing that stopped the fight was the bell. Just like with the markets, at 4 p.m. Friday, if the market was open later, if the market was over on the weekend, the selling would have just kept coming and coming and coming. They're saved by the bell, as they say. But again, big gap down here as expected. Now, I want to talk about that a little bit, kind of go back to where I started. Listen, trading wise, you look at RSLS, ICCT, AREB, CXAI, AEHL, WDT. And especially stocks like RSLS and AREB and ICCT. All three of those had multiple trade opportunities through the week. You go back to Monday on ICCT, and I'm learning the new software. Let me do this. Boom, I did it. I didn't screw it up. All right, so ICCT, we come out Monday morning, gapped up big, and then what was beautiful about ICCT on Monday, did a dip and rip, okay? Pulled at the market open, rebroke the day's highs at about 80, 90 cents, and immediately ran up, to $1.20, and then had a second leg VWAP hold into the afternoon. So even if you missed it in the morning, it went from $1 to $2+ on Monday, then was a decent runner Tuesday, went to sleep Wednesday, was another great runner Thursday, and then you come in Friday morning, another great runner in the morning. And what's great about ICCT, still closed in the 570s. This is on the weekend watch list. If you guys are watching this, if you got the weekend watch list, hopefully you did. This is on there. Look at how this thing closed on the week in that, disaster of a market. Chris says he's going to be trading a lot in pre-market. Guys, pre-market's hot tomorrow morning. Listen, the reason I'm doing this live stream is because I'm going to bed, because my alarm is set for 3:45 a.m. Normally it's set for 4 a.m. I'm actually getting up 15 minutes earlier tomorrow because pre-market's going to be ridiculous. Like, we're going to have so much madness. Like, this is the time to be trading pre-market. So well said with trading in pre. Pre's going to be crazy hot. Like, these extremely volatile times, like right now, listen, pre-market, well, all day, really. You look at CHSN Friday night. Friday night, again, another dip and rip. It was kind of cool. I actually completely missed this one, but the dip and rip algo, okay, so I got an algo that looks for dip and rips. I missed this one. I left for, went outside. CHSN alerted at 5:02 p.m. by the dip and rip algo at 22 cents. It went to 38 cents. So the big reason I bring that up This was all automated, done by the algo. The reason I brought that up, these are the times. Like you go back to the financial crisis. Remember, I started trading 20 years ago. I traded during the financial crisis. That was insane for day trading. You think back to 2016, COVID markets. Okay, like I started with this, and I know I'm kind of doing the weave here, but when the markets get this volatile, this is when it pays. It pays for short-term trading, day trading. I mean, and again, you look at AREB on Friday, ICCT on Friday, AEHL, CXAI wasn't bad, and then CHSN in after hours. What happened with the podcast with Matt McCall? Raymond, I'm assuming you liked it, and I appreciate that, Raymond. Time. It was just a time thing. That's why I'm doing lives. Now I've got a 7-page agenda that I've put together. But loved doing the podcast with Matt. He's really busy. I'm really busy, getting together at the same time, and then writing an agenda, etc. It was just a time thing. So I'm glad you guys enjoyed it. We did it for about 6 months, but we just ran out of time. So someone asking about futures. Yeah, let me bring it up. Let me take this. Huge gap down. So we got 4% gap down on the S&P right now. So I'll leave this up if you guys want to watch it live. So anyway, back to the agenda, and keep the questions coming, guys. The reason for doing this live is, to answer questions. So keep those questions coming for sure. I was supposed to be live on X too. It looks like I screwed something up. Dang it. Oh, well, that's why I'm doing a dry run. So just to kind of recap the week, some of the biggest headlines: Trump's Liberation Day with the tariffs. Listen, tariffs are going to create a lot of short-term pain in the indexes, in the overall markets, in a lot of long-term trade, or a lot of higher priced, higher quality stocks. But what it does is it brings volatility. So I love this. Okay. Now keep in mind, listen, I have several IRAs. I have a lot of long-term holds. I got a lot of exposure to the S&P and to the NASDAQ long-term, but those are all long-term investments. Okay. Like I literally don't care what the S&P and the Dow do day to day, because those are just index funds. I leave them alone. That's my money for when I'm 100 years old. Listen, look at the 100-year trend of the S&P. This is what drives me nuts, is people panic about pullbacks. All these little pullbacks in the indexes, who cares? Especially if it's going to introduce the type of volatility that gives us RSLS, AREB, CXAI, ICCT, CHSN. This was one of the greatest weeks for day trading in months. So who cares what the overall indexes do? Now back to the tariffs. It's going to continue to create more pain, but it's the right decision. You're going to get a lot of editorial on these live streams. Okay. This is where I'm going to get in trouble. Like, I've been canceled a few times. These live streams are definitely going to get me canceled, because the idea is this is a lot of editorial. This is a lot of opinion, and I'll probably get canceled, but hey, whatever. Guys, one of the worst, in my opinion, the single greatest business decision in the history of business decisions was offshoring manufacturing out of the U.S. We have always been, going back to the Industrial Revolution, the greatest manufacturing power in the history of the world, going back to the Industrial Revolution. You look at what we did during World War II. We won World War II with manufacturing. Now, we did it with a lot of manpower too. And if you had some relatives that served, God bless them. God bless you boys for fighting in those trenches in Europe. Okay, you gave everything for that. But we won that war. We won World War II with manufacturing prowess. We won the Cold War with our R&D, our manufacturing prowess, our ability to outproduce any country in the history of the world. And then some jackass in the 70s and 80s decides it's a good idea to move all of this stuff out of the country to save 2 cents on a car, gut out the Midwest, which is where I'm from, close down all the steel plants, all the manufacturing plants, destroy Detroit, destroy the Midwest to save 2 freaking cents on a car that costs 30 grand, okay? Dumbest business decision in the history of the world. It reduces the tax base. It reduces the standard of living in this country, okay? So I don't care what happens to the S&P or the Dow over the next 6 months or a year if it brings manufacturing back to the United States where it never should have left, and it puts more money in the pockets of American people, providing more jobs, more income, which creates more taxes, which helps the country overall. And when you got a wealthier, better off population, the whole country benefits, okay? So I don't care. I don't care one bit if some boomer, okay, boomers are who got us into this whole freaking mess. It was all the boomers that decided to max out all the debt and sell out all the jobs so that they could increase the cost of their house. That's all they care. And all they managed to do was make buying a house for the average American, the average young person, like a 20-year-old, 30-year-old, it's almost impossible to buy a house because all boomers cared about was their housing price, pushing that higher because they were retired and they were already wealthy, and they sold out the country. And that's all they care about. And now their sons and their daughters and their grandkids can't even buy a house. That's getting fixed over the next couple of years, and it never should have happened in the first place. So if the markets sell off in the short term, that's why we day trade. That's why we swing trade. And in a couple of years, America is going to be back to where it was in the 50s and the 60s, producing everything in the world, supplying the world, and the wealthiest, greatest country in the history of mankind. So there's my opinion on tariffs. I probably just got canceled. So anyway, there's my opinion on tariffs, my friends. If you can tell, I'm kind of pro-tariffs, and I'm pro-American manufacturing, and I'm pro-American people, okay? Listen, if you want to call me a nationalist, I know nationalist can kind of be a dirty word. I am an unapologetic nationalist. You know what I care about? I care about America, and I care about the American people, my fellow Americans. So my fellow Americans. That's who I care about. Everybody else, hey, man, we got to get your own. You got to get your own. You want to outproduce America? Well, then you better work a little harder at it instead of riding our backs, okay? Instead of tariffing us and taking foreign aid, okay? Leeching off of us. Meanwhile, you tariff us and we can't tariff you. Hey, man, eat what you kill. Eat what you kill, okay? You want to outproduce us? Let's see you do it without monetary policy enhancements, without foreign aid and all this other money flowing out of the country, because now it's going to stay in the country. And baby, it's going to be the golden age. And you know what? The S&P and the Dow probably going to be uglier tomorrow, probably going to be uglier through the week, but in a couple weeks, couple months, we're going to have the biggest bounce you've ever seen. And if you do trade longer term, you should be excited. You should be excited about the buying opportunities that are coming in the short term. Okay? Coming in the short term. Make America polluted again. David, that is, again, listen, we have no business is going to pollute. It's just, that's one of those, so it's better to pollute the rest of the world. We're all on the same planet. And number one, it's not the 50s and 60s anymore. We have controls. Everything's cleaner. Look at coal, look at nuclear. It's not 50 years ago. We fixed all of this. All of the groundwater pollution, all of the nuclear, all of the coal, it's all been fixed. That's the beauty of technology. It fixes everything. So back to the point. Let me get back to my notes. NVIDIA, Tesla, both down big, but listen, I know a lot of you have been waiting for the opportunity to buy NVIDIA or Tesla. Here in a couple weeks, you're going to have that. Now, what we don't do, we don't guess bottoms. Okay, we don't guess bottoms. We wait for technical support, okay? Now, if you don't know technical analysis, I teach it every day, but never, ever, ever try and guess a bottom. What we're waiting for over the next, if you want to trade the NVIDIAs and the Teslas and Apples, listen, Apple was down 10%. That's like a gift that Apple was down 10%. How many of you have watched these companies go up for months and months and months and years and never wanted to buy the top? All of these pullbacks, once they start forming technical support, then you've got an area to risk off of. So once they start to base, start to grind sideways and lift off, that's your buy. And then you have a beautiful stop loss. If something else happens in the world, they break back down, you just stop out at support, okay? That's what we do. We don't guess bottoms. We wait for technical levels to form, and then you trade off of those technical levels. Don't trade with emotion. Don't trade with hope. Don't try and catch a falling knife like someone said. You wait for the base to form, buy the turn, and risk the base. Crazy small cap momentum, okay? Again, guys, just going back to ICCT. And listen, this is the other thing, just to show you guys something else. I want to show this because this is the power of right now, okay? So when you're thinking about, you know, whether you should be day trading right now, okay? So this shows the small cap momentum we're seeing right now. Now, I want you to notice this list is not every small cap runner. This is not every small cap runner this year. But what I want you to do is peruse this list. Every one of these stocks was alerted by the Oracle day trading algorithm, okay? It focuses on small caps. Some of you might have heard of it. Some of you might even have it, okay? But what it does is it looks for extreme volatility, float rotation. It looks for all the top chart patterns, dip and rips, morning panics, RCTs, all the patterns we look for. And then it uses the algorithm to give predictive entries, okay? After the market opens, you get a predictive entry. So each one of these was the percent gain past the Oracle entry. And this is just this year, okay? The most recent 100% runner was Friday, AREB. It was alerted at about 8, I think it was 8 something a share, 860, something like that. After the initial spike, it hit that. It hit the entry about 9:45, 10 a.m. Perfect time of day to avoid that initial market rush. And it obviously went to 20. Now, I want to point to a couple things on this. Every one of these moves had an entry from the Oracle algorithm at the market open. Every one of these moves is past the entry. Most of these stocks that Oracle alerts are big pre-market gappers. Some of these things are up 100% in pre. So these moves aren't the daily move. It's not the daily move. It's the move past the entry from the algorithm. And I want you to, the other point I want to make on this, and this goes into small caps. I mean, these are all small caps. They're almost all low float stocks. They're almost all traded crazy volume, everything we look for in day trades. The other thing I want you to know is this is just the ones that went up over 100%. So if they went up 20%, 30%, 40%, 50%, they're not on this list. So that shows you the small cap volatility. And then I just go back to this week again, RSLS, ICCT, and then again, CHSN, even in after hours. Small caps are where it's at. Small caps flourish in times like this. You got to know how to trade them. You got to have bulletproof discipline. You got to have the right entries and exits. You got to honor your stop losses. But we're going into the golden age of small caps. Let me get to my agenda here. So a lot of people asking, okay, what's the game plan tomorrow morning? Okay. Now, tomorrow morning, it's going to be a lot like every morning, really. I mean, it's kind of the same idea. What I want you doing is scanning. Okay. All of you should have a stock screener. If you stocks to trade, obviously I'm biased. Spoiler alert, I'm biased towards stocks to trade. But there's a lot of other tools you can do it. Thinkorswim, you can do it. There's a lot of platforms. What you want to be doing tomorrow morning, 4 a.m., if you want to get up that early, you want to be scanning for the big gappers with float rotation. Okay. Float rotation, float rotation, float rotation. So many people overlook that. They buy these stocks that gap, but they're either big float or they don't have enough float to rotate. Okay. And then they either fade back or they never go anywhere. It's because you got to focus on low float stocks that are rotating the float, which means they have extreme multiples of the 60-day average volume. So the thing you want to do tomorrow, look at the 60-day average volume, look at those gappers. Are they trading exponential multiples of the 60-day average volume and rotating the float? And remember, the lower the float, the better. A lot of people are asking me, Tim, why did AREB move like it did? They did a recent reverse split. They did a reverse split the week before. They brought the float down to like under 1 million shares. That's why AREB moved like it did on Wednesday. That's why AREB moved like it did on Friday. And that's why AREB is still in play. So speaking of AREB, if what you want to look for tomorrow, please gap down AREB. Please, 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 please. Now, my fear is AREB's just going to gap and go, okay? Because everybody's stuck. Look at that 8 p.m. perk. Some moron covered into the 8 p.m. NASDAQ close. Look at that candle. He's like, get me out. But my fear is, because of all the shorts that got reloaded, what's great about AREB is it squeezed all morning, then they dropped the offering, and these guys re-shorted and got smoked again. So if they reload on a gap down tomorrow, holy crap, anything's possible. Now, my fear and my recommendation with AREB, if it gaps and goes, just let it go, okay? Hopefully you traded it Friday. Hopefully you traded it Wednesday. If it gaps and goes, just leave it be. Because, man, when it ends, it's going to end badly. Like AREB, it's going to, I mean, remember, this is the worst company in the world. This stock's probably going back to $1 a share. So if it gaps and goes, stay away. But if you get a gap down and then a red to green move on this thing, like this could be another holo. And now that doesn't mean you hold for crazy targets. You have a trade plan, take your slice of the pie. Don't try and get rich in one trade, but you get a gap down and a red to green move. AREB, as of right now, obviously we don't know what's going to happen when the market opens. But if this thing gaps down and goes green, number one watch. Now, if it gaps and goes, just tip your hat to it and say thanks for the memories. Now, other ideas I want you to keep an eye on, back to the scans, less than 10 million float. Okay, somebody asked about the number of float, less than 10 million float. Okay, and we have, now a lot of people say, well, less than 10 million float, there's not that many, but you look at last week, and I know I keep naming these tickers. ICCT less than 10 million, RSLS, and ICCT was great several times. AREB, I mean, they're all of the best opportunities. They're the biggest spikers because of float rotation, and people get twisted up since the float is so low. They short them, they get stuck, they get panicked, they get squeezed out. I'm trying to follow my agenda, but I'm not that good at it. And then other ideas, again, hopefully you got the watch list. IBIO, Dollar Cross, AEHL, Dip and Rip, CXAI was a grinder. I expect CXAI to continue to grind, not really an explosive mover, but I do think that one could continue to move. So yes, Randy says Jesus hates bag holders. Randy, everyone hates bag holders. Okay. And listen, this is where I'm going to get canceled again. I'm a believer. Okay. I am a believer. Big fan of you, Jesus. So hopefully this doesn't get me canceled. But yes, God hates bag holders. Everyone hates them. And they deserve the disdain. They deserve it. Okay. Because all you have, and this is my last point, and then I got to run. Remember, tonight was just kind of a trial run. The market hates undisciplined people. If you have lack of discipline, the market hates you and everyone hates you, and you deserve to be punished, and you will continue to be punished until you become disciplined. Well, two things are going to happen. And this is why the market hates bag holders. This is why God hates bag holders. This is why everybody hates bag holders, and they should. Two things are going to happen if you break stop losses, if you bag hold. You're either going to blow up, you're going to lose all of your money, all of your money's gone, or you're just going to quit. No one that breaks stop losses and lacks discipline has ever been successful in stock trading. Now, I will leave you with this point. Anyone can be disciplined. Anyone can work hard. Anyone can write a trade plan. Anyone can execute that trade plan. Now, you have to do it. If you buy a $1 stock and your stop loss is 90 cents, you have to honor that stop, but that's where discipline comes in. But anyone can do that. Now, most don't, okay? Most don't do that, and that's why so many fail. And it's not the market maker's fault. It's not the pumper's fault. It's not the dumper's fault. It's not the short seller's fault. It's nobody's fault but yours. If you do not write a trade plan before entry so that you know what you're going to do if this stock goes against you, and then ultimately follow that trade plan and have the discipline to execute on that. Now, if you don't do that, you will forever struggle. You'll probably lose all your money and you'll probably quit and you'll say, oh, day trading sucks. No one can do it. Well, you know who can't day trade? Undisciplined people that can't stick to a plan. And that's 90% at the end of the day. Now, I will leave you with this point, my friends. If you can do that, if you can use technical analysis to map out trades, which is something I teach every day, okay? If you can, it's not hard to learn. People think support resistance like it's hard. It's not hard. It's not hard. Now, it takes time, like anything. It does take time. But if you can use technical analysis to write a trade plan, I don't care how volatile the stock is. I don't care about the volatility of AREB. I don't care about the volatility of AHL or WCT or ICCT or CHSN. If you can do that and then follow that stop, you will almost invariably be successful. But who will never be successful is people that don't do that. And it's really that simple. Now, there's a lot more into it. I don't want to oversimplify trading. Sure, you got to understand level 2. Sure, you got to understand, we talked about float rotation, some of these things. But at the end of the day, it all just boils down to that. Can you write a trade plan and then execute that trade plan using the technicals? That's day trading. That's day trading. Now, again, that's like the extreme cliff notes. But so many people are focused on all this other stuff. What about the SEC filings? What about the dilution? What about this? What about that? Now, you need to understand that, and you should study. You should be a student of the game. Hopefully, my videos and my rants help with that. But at the end of the day, that's all that really matters. Decide and execute. All right, guys. Next week will be longer. I do have an engagement at 7 o'clock tonight. This was just a trial run. Drop me some comments. Let me know what you think. Again, if the rants were offensive, I apologize, but you don't have to watch, okay? I told you in advance, this is going to be very opinion-based. It's, you're going to get a lot of editorial, might be a lot of stuff you don't like, but you don't have to watch. You can close the live stream. Decide and execute. Have a good night, guys.